Hello and welcome to my latest YouTube video. Today we're going to be discussing a topic that has been making headlines recently, the surge in Alibaba stock. Alibaba, which is one of the largest e-commerce companies in the world, has seen its stock prices rise significantly over the past few weeks. As an investor or someone interested in the stock market, you might be wondering what's behind this surge and what it means for the company's future. In this video, we'll take a closer look at the factors that have contributed to the rise in Alibaba's stock price, and we'll also explore some of the potential opportunities and risks associated with investing in the company. So if you're ready, let's dive in. Since its peak price at the end of 2020, Baba's stock has experienced a significant drop, hitting its lowest point in October 2022 around $63, thus causing concern among investors and those following the stock market. There are reasons for this drop, and a whole coverage of this topic was done in one of my previous videos. Feel free to check it out in the given link. However, in the recent weeks, the stock price has started to rebound, bringing some relief to those who have invested in the company. The price has almost doubled and it's standing currently at around $103. And the main reason of this soar is that Alibaba announced a radical transformation into 6 different companies. The Chinese e-commerce giant is splitting up into 6 separate business groups: the cloud intelligence, cloud commerce, local services, smart logistics, global digital commerce, and digital media and entertainment. Each group will have the ability to raise outside funds, operate independently, and potentially go public via initial public offerings. One might ask, why is this important? Well, as is stated in this report, the company stated that the move is designed to unlock shareholder value and foster market competitiveness. Another important reason is the return of Baba founder Jack Ma to China after a year-long exile. Ma's original departure overlapped with Chinese government efforts to crack down on tech monopolies. Now, investing in Alibaba after the split into 6 entities could offer several potential advantages. Here are some of the reasons to consider. Navigating regulatory pressure. The restructuring was partly a response to increased regulatory scrutiny from the Chinese authorities. By splitting into separate entities, each business might be better equipped to comply with regulations and avoid fines or operational restrictions. This could lead to a more stable investment environment. Improve financial transparency. Each of the 6 entities will have its own balance sheet and financial reporting. This increased transparency can make it easier for investors to analyze each business' financial health and make more informed decisions. Potential for higher valuations. The market might perceive the sum of the individual parts as more valuable than the original conglomerate, which could lead to higher valuations for the separate entities. This can provide growth opportunities for investors. Diversification. The split has allowed Alibaba to form 6 specialized entities, each focusing on a different area of their business. This diversification provides investors with the opportunity to invest in the future in specific segments that align with their risk appetite, investment strategy, and growth expectations. And the last one is regulatory easing in China. Jack Ma's return to China has investors pleased amid speculation that Chinese regulators will continue easing up on overly burdensome policies. Alibaba's organization will likely draw support from the Chinese regulators who have been concerned with high levels of concentration in the technology sector. As the Chinese economy opens up following severe COVID restrictions, the future looks bright for Chinese stocks that were decimated in the past few years. However, it's important to note that after this split, it's crucial for investors to carefully analyze each entity to determine the potential benefits and risks associated with their investment strategy. The main potential risks here are the exposure to the Chinese economy, currency risks, and uncertainties around regulatory pressure. This is a sum up of the advantages and disadvantages on investing in Alibaba after its restructuring. Thank you guys for watching the video, and I'll see you on the next one.